Welcome everyone to HueFin News. Today is December the 5th, 2018, the home of the 2-minute price prediction, as well as giving you all the news according to the charts. If this is your first time coming to this particular channel, make sure that you don't forget to subscribe to this channel, like the video, as well as share it if you appreciate the content that we are delivering to this platform. Now, what we do here as a channel, we usually go ahead and analyze the articles, look at some videos, and then we try to look at the price charts to see if we're getting the same type of sentiment that the article is trying to display. Okay, because we're under the perception and we maintain that the price charts is the truth. The price charts literally gives you the overall emotional feel of all of the market participants in the space, and it tells you the direction that it's really trying to go. So as we look at these articles, we're going to look at the price chart to see the same type of feel, and if we do, then we will go along with the article. If we don't, then we will not go along with the article, because we will always side with the price charts. Okay, so what we're going to talk about today, if you guys are definitely in tune with the market, you saw that the market took a dump yesterday. Literally all of the stock markets got battered today in this space, and we're going to talk about that because we told you in our last video that we uploaded on December 3rd, 2018. We will have it as an end card for you all to view, telling you all, ask you all the question: is this the opportunity to sell the rally? Because after that G20 meeting, a lot of the broadcasts, a lot of the media outlets came out and stated that there has been a truce, or the trade war has been halted for the United States and China trade. Granted, I told you all in that video on the 3rd of December that nothing has been agreed to, nothing has been cemented, and definitely nothing has changed over the last weekend. So it really didn't make sense to see those stocks or even the stock market move as high as it did yesterday, on Monday. I'm sorry. Now, you can see here on this article that the United States stock market got battered by the trade war, as well as the yield curve. Okay, it has inverted. The 3-year and the 5-year government bond yields have inverted. That simply means that the 3-year interest rate is higher than the 5-year. And usually that means that those bonds are becoming more risky on a smaller time frame. You usually would expect the longer term yields or bonds to carry a higher interest rate rather than the shorter term ones. So once you have the shorter term bond yields higher than the long term, it definitely tells you that something is awry. And usually many of these experts, if you want to call them that, in the field, states that usually 6 months to maybe 2 years is when you should see some correctional moves, recessions to start to enter the market. So expect that to occur in the space if the 2-year and the 10-year bond yields literally inverts. Now it's just on the surface for the time being, so the market is not necessarily as drastic as some may see, but given the fact that it's on the surface now, you definitely need to start paying attention to it. Okay, so we're going to look at this article, and then we're going to give you all an update from the video that we did on the 3rd of December to see if the market is going to continue to move to the upside, or will we even get a rally towards the end of this month. Okay, so go ahead and scroll down here. The market ended the day down for the Dow Jones 3.1%, and it lost 799 points yesterday. The Nasdaq was down 3.78%. It lost 266 points, and the S&P lost 90 points, and it ended down 3.24%. So you can see here, it's one of the points that I highlighted in this article, that the United States stocks plunge, with the Dow Jones losing 800 points amongst a litany of concerns that wiped out many of the increase in price that we saw on Monday. Some of the concerns that is still plaguing this particular market is the United States and China trade did not make any meaningful progress on the trade front this weekend, and we told you all that on December 3rd. The financial shares got hammered because the yield curve continues to flatten, or on the 3 to 5 year yield, it inverted. Okay, added to the risk aversion was also the news that the United Kingdom Prime Minister Theresa May's push to avoid a so-called hard Brexit may be at risk. That would definitely be detrimental to the financial markets. And then there's a pile of negative Brexit news. Federal Reserve official Williams, he starts to ramp up more hawkish talk, meaning that the increase of the Fed rate is going to continue. And then you have the yield curve acting like it has gotten run over. This, amongst many other things, is the main cause and reason as to why we saw an 800 or 3%, 4% drop in all of our financial indices yesterday. Here is a Bloomberg chart right here. You can see that the key technical level has been broken. The S&P 500 has fell below its 200-day moving average. That is definitely a negative thing if you guys are into technical analysis. All eyes is still on the yield curve after the 3-year yields climbed above the 5-year peers on Monday, potentially foreshadowing the end of the Fed's tightening campaign. Now, it goes on to say that many other people in this industry closely watch the gap between the 2-year and the 10-year yields, and right now this article states that it is upwardly sloped, so there's not a lot of concerns on a wider scale between 2 years and 10-year yields, but it's definitely something that everyone is going to continue to watch. Also, you can see here that traders are starting to bet that the Fed will cut interest rates as soon as 2020, so less than a year. Many other traders in this particular space are now trying to state that the Fed won't be increasing the interest rates, that they're going to start cutting it around 2020. Now you have an individual here named Dan Skelly. He is the Morgan Stanley Equity Model Portfolio Solutions Head. He told the individuals on Bloomberg TV, if you look at the market the last week or so, you saw that the market popped on two situations. The first one was the Dover's Fed, meaning that they're not going to increase interest rates. And then you have another pop on the trade headlines this previous weekend at the G20 summit. And he's trying to tell you all that it's hard to have both. A market can't pop on the Dover's Fed and then pop on a trade war truce or ceasefire, if you guys want to consider that. It's hard to have both, in his opinion. Okay, so where we're going to go ahead and leave a link for you all if you guys want to continue to read up on this article. But again, we at HueFin News do not focus on our articles. We're just going to take what we've read and then we're going to translate it over into the price charts to see if they both correlate, see if they both are in line. Okay, so now we're going to go ahead and look at these price charts to make sure that we are in fact seeing the same depiction as to what is occurring on in the market. Now, even though the stock market is not trading today, considering the National Day of Mourning, the futures is still being traded. And right now you can see that the NASDAQ is up almost 0.75%. The last trade is around 6,844 points. Considering that this is the daily price chart and we broke a very minor area of support right there at 6,900 points, I'm not expecting the NASDAQ to continue to move to the upside tomorrow or maybe even Friday. Okay, 6,900 points is now acting as the area of resistance. We did receive a lot of volume yesterday, so we definitely need to be careful in the market for the NASDAQ. We told you in our video on the 3rd of December that this week is going to be crucial, and this is the current week right now, the NASDAQ. And if we close towards the low of this current week, then we're definitely going to continue our movement to the downside, maybe even hit that 6,600 point area or 6,700 points. So overall, considering that massive move that we've seen in all three of these indices up here at the top of the screen, definitely seems likely that we're going to continue to see the move to the downside for these markets. Okay, so let's go ahead and look at the S&P 500. Pretty much the same thing. We're still on a wider scale on all of these indices or markets are in a consolidation. Okay, but we did come and already touched this upper area of resistance around 2,800 points. This has been our third time doing it over the last 2 months. So it is not a positive thing to see the S&P 500 hit that top area and moving towards the bottom of the bar. Still seeing more or less some consolidation in the long term, but all three of these markets are trending to move lower. Okay, 2640, maybe 2680 could be an area of support, but that's only in the short term. Definitely is a lot of negative news being placed on articles, videos, and even on the price charts. You're still seeing that the sentiment of higher prices is currently not being seen. Okay, looking at the Dow, again, this particular market is trading within the consolidation as well. Considering that major move we saw yesterday in trading and how we're closing towards the low of this weekly bar, I don't see the Dow moving to the upside right now neither. Okay, there's too many uncertainties in the market right now, and the market is very reluctant to move to the upside in uncertainties. Okay, they like to be certain as to what occurs in the market because they're risking millions and billions of dollars on a daily basis. And when there's uncertainty in the market, you can best believe that we will hold consolidation and movement lower to the downside. So we're still watching these three markets, but considering what happened yesterday, it's highly likely that we're going to continue to trend lower in price or in points. So definitely, we just want to come here and give you all an update of what we're noticing in the market for the United States. Tell us your opinion, give us your comment, and let us know with a comment in the comment section of the video. Again, we do appreciate you all watching our content. Make sure that you go ahead and subscribe, like, and share this video as well, because this is how you're able to determine what is likely to happen in the financial markets. You look at articles, you look at videos, and then you come back and look at the price chart to see if that is exactly what is going to occur in the market. And currently, looking at the article from Bloomberg, looking at these three price charts, definitely reveals with the uncertainty in the market that weakness is still here for the United States stock market. We're still looking for these markets, these stocks, to continue to move to the downside as a generality in general. Okay, I'm not expecting on a specific basis, but the sentiment as a whole is definitely not strong and is leaning more towards it moving to the downside. So that is our opinion. The price chart is telling us that uncertainty is here. The Bloomberg article is stating the same thing with many concerns that has not been dealt with. So we all are in agreement that we should continue to see market moving to the downside for many of these indices in this space. We do value your opinion, so make sure that you all go ahead and give us that comment in the comment section of this video. Make sure you all maintain your profitability, and I will talk to you all later.